Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 9th of April 2016 and we're providing our gold and silver update for week ending the 8th of April. Gold rose in US dollar terms last week by $18 from $1,222 to $1,240 an ounce, having been as high as $1,242 and as low as $1,213. In sterling terms, gold rose by £19, and in euros it rose by €15. Silver rose by 31 cents from $15.05 to $15.36, more or less ending at its week's high, and having reached a low of $14.90. In sterling terms it rose 30 pence, and in euros it rose by 0.26 euros. The gold to silver ratio fell slightly from 81.2 to 1 to 80.73 to 1. The Dow Jones closed on Friday at 17,576, up 35 points on the day, but down 216 points on the week. And the NASDAQ closed at 4,850, up 2 points for the day, and down 64 points on the week. Brent Crude was up a little over $3 at $41.94, and US Light Crude was up almost $3 at $39.72. The dollar index stands at 94.23, that's down 0.39 on the week. Gold initially fell at the beginning of last week, rallied a little, fell again, but then rose after the Fed comments were aired, basically reconfirming an accommodative stance and an unlikelihood that rates would rise in April, and even the possibility that they may not rise in June. Silver followed a similar path to gold, rising almost 2% on the week, with gold rising 1.4%. This week was essentially a dollar play, with the dollar weakening as the chances of an interest rate rise anytime soon faded. Though one must not completely ignore Janet Yellen's comment this week, quote, "There is accommodation in the monetary policy that we have, but we think the gradual path of rate increases will be appropriate. We remain on a reasonable path, and I don't think December was a mistake," unquote. It is encouraging to see both gold and silver end the week near their highs, which may run on into next week. Technical analysts believe that silver may again attempt to push towards $16, and if this occurs it could have a higher run-up thereafter, though we see a number of resistance levels before that point is met. Interestingly, yesterday, UBS maintained its average gold forecast for gold for 2016 to stand at $1,225, but cut its price outlooks for silver, platinum, and palladium. It reduced its silver average from an original quotation of $17.20 to $16.10, which is still a little ahead of where it currently stands. To counterbalance this, the latest CFTC statistics confirmed a deterioration in speculative positioning in silver. The net speculative length fell in the week ending the March the 29th. It now stands at 54,507 contracts, down 8,922 contracts, or 14% from the previous week. Our view on gold is that it is still receiving safe haven demand, and to some extent buoying the other precious metals. Silver, though still underperforming gold for the year, is holding up quite well. And whilst we do not foresee any dramatic rise in price, we also do not foresee any dramatic fall until the Fed's interest rate policy becomes clearer. So we are changing our view slightly for the next few weeks, from bearish to pretty much more of the same. This therefore supports our mantra from the past couple of months, which states that should you be underweight in metals in your portfolio, then you should at least consider purchasing on dips. If you're not underweight, then there may be better times ahead to make additional purchases. The same applies to silver. For those who are living in countries other than the US, which are adopting negative interest rates, and feel that rates may go even lower, should bear in mind that the acquiring of gold and silver should be considered as a hedge. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at www.illuminatisilver.com and look at our Facebook page, which is updated daily at www.facebook.com/illuminatisilver. Disclaimer: Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.